Hello friends, a very warm welcome to my channel. In today's video, we are going to discuss the latest updates and the outlook about Happiest Minds. Recently, TCS has come out with good numbers. So next week, there would be a positive sentiment in the IT sector as some green shoots are visible in this industry. As the slowdown is expected to be over, you can see some confirmations as the results of some other IT companies are out later this month. So I thought this is the best time to analyze a IT company which is none other than the happiest company listed on the stock exchanges. So let's talk about Happiest Minds. If you're new to the channel, please do subscribe and hit the bell icon. And if you're not a part of a Telegram channel, do join today by clicking the link in the description button so that you join the correct Telegram channel. Every day morning, I share my views on the market, which will help you manage your portfolios and increase your returns much better. So this will be the flow of our discussion. We'll start by understanding the business model in brief. We'll look at the stock performance in the last couple of years. We'll see the main financial parameters. We'll discuss why the stock has fallen in the last few years. We'll talk about the outlook of the management going forward. We'll look at the valuations at present. As post the corrections, the valuations have drastically changed. We'll look at the possible risks of investing in this company and we'll form an overall view after this discussion. So the founder of Happiest Mind is Mr. Ashok Soota, who is an industry veteran known for scaling up companies like Mindtree in the past. So this particular company has a different pedigree altogether, and that's why these are not available at very cheap valuations. Another reason for giving premium valuations to this company is this is not just another IT company developing normal software products. They focus only on the digital side of the business. They focus on technologies like cyber security, digital transformation, product engineering, etc. So out of the total business, 95% of the business of this company is into digital services and 87% of the business is repeat business. So these are the couple of reasons why this company gets some premium in valuations compared to other IT companies. Now when you look at the areas of focus of this company, they focus on areas like artificial intelligence, Internet of Things, blockchain, metaverse, data security. So like this, they focus on some niche areas. Going forward in the coming slides, we'll talk about the recent collaborations which are done by this company, which are even into the green energy sector. So this has been the stock performance. It made a high of somewhere around 1500 in the past, and from then onwards there was a correction as the valuations were very high and the performance was deteriorating, and from then onwards it became sideways and it has built a strong base with 750 as a strong support. But technically it is still making slight lower highs and lower lows, so we cannot be sure that the bottom is made unless the numbers show some improvement and there is some recovery on the charts. In terms of revenue, there is a steady growth of revenue in the last 5 years, but the growth in FY24 versus FY23 is not as high as earlier, and the company has been giving a guidance of about 12% growth in FY24, which they continue to maintain even now. In terms of EBITDA, there has been a steady rise in EBITDA and the margins have been strong, but in FY24 we see some pressure on the profits. The margins in FY24 are slightly lower compared to the earlier years, but the management is confident that they will maintain an EBITDA margin of about 22 to 24% in the long term going forward. Now, what are the reasons for the fall in the stock price? The growth was not as good as before. There was pressure on the margins of the company. Globally, especially in US, there was a slowdown and the demand environment was not as strong as before. This was seen on the results of all the IT companies in India. Valuation wise, it was very expensive. At one point of time, it was trading at nearly 80 to 100 times the earnings. So that was not sustainable valuations in the long run. And that's why we saw the institutions reducing their holdings, which created more pressure on the stock. Now, what is the growth outlook of the management going forward? I have taken extracts from the recent earning call of Q3 FY24. So the management is confident that they are on track of achieving their 10-year goal of $1 billion revenue by 2031. There are three measures they have taken to boost up their sales in this quarter or in this year FY24. They have created a separate AI business unit to focus on this area of business. They're hiring a new sales head in North America, which will focus on getting more clients in that area. And until now, they were having teams on the basis of the domains, but now they will also create teams on the basis of different industries, which will focus on that particular industry to get business. Overall, in 9 months FY24, you see a constant currency growth of somewhere around 12% and an overall growth of about 15%, which is not too bad when compared to others when there is an industry slowdown. So even when the macro environment is weak, the company continued to show some growth. But the EBITDA did not grow as fast as the revenue. That is why the EBITDA showed a growth of just about 12% in the 9 months FY24. The company continues to be actively looking for acquisition targets, and they have also done some fundraising in the recent times, which could be an indicator of that. As on December ending 23, which is end of third quarter, they have about 245 clients. Out of that, 45 are $1 million clients and 59 are $1 billion clients. There were some additions in the clients compared to the previous quarter, which shows that the growth is still intact. Q on Q, the utilization has improved slightly from about 75% to 76%, which shows that the people are not sitting idle and there is improvement in the utilization levels. They've added 10 new clients in Q3 FY24. Overall, there is some softness in the demand in some areas is what the management says. I would also like to mention a couple of collaborations or partnerships which the company has done in the recent times, which are very interesting. One they have done in the area of green energy, which is wind energy, with a company called Enercon, which is a global leader in wind technology. Another partnership they have done with a company called SecureWorks, which is into cyber security. So these kind of partnerships in specific futuristic domains show that the company is going into the right direction. When you look at the valuations, historically the company was getting a median earnings multiple of somewhere around 62 times, and right now it's trading at somewhere around 50-51 times, which is reasonable when you compare the historical valuations which the company has got, but slightly premium when compared to other companies in the same domain. But I have told you a couple of reasons earlier why this company should be getting some premium over the others in the same industry. So that's why I wouldn't call these valuations are very expensive for a company like Happiest Minds, which is of this pedigree and which works in niche domains. Now, what could be the possible risks going forward? The slowdown in the globe, especially the US, may continue for a couple of years more, which could lead to the pressure on demand for these kind of companies. Then the competition with the existing companies as well as the new startups is increasing, and the inorganic acquisitions which the company is planning to do, if they are not executed very well, that could be a possible risk. But overall, I don't see a very major risk of investing in this company. So now, after discussing the business model of the company, the growth outlook, the valuations, the guidance of the management going forward, what is our overall view? If you are already holding the stock, then you should continue to hold, because there is a possibility that the bottom is made in the stock. And if you are looking at fresh entry in the stock, then you can start with a small position and constantly monitor the quarterly results. If, as the management says, and as the green shoots are visible in other IT companies like TCS, if the results begin to improve, then you can build on to your positions as and when the results, as and when the improvements as a results is seen. Technically also, 750 zone looks at as a strong support for this stock, and by evaluating the results of other companies which are expected in the coming weeks, we'll get a sense of whether the demand environment in the IT sector is improving or not. Based on that, the position sizing can be adjusted. So that's about Happiest Minds. I hope you like this crisp video where I have tried to cover only the major points. A full-fledged video of this company is available on our YouTube channel. You can go back and refer to that if you want to understand the business in more detail. So if you like the video, hit the like button and subscribe to the channel, and don't forget to join our Telegram channel. Mention your suggestions for the upcoming videos in the comment section. Thank you for watching and have a wonderful day.